Good afternoon, everybody. I hope you can hear me. You can just type in a little question box that you can hear me clearly. I appreciate that. Well, welcome to another session, another webinar this week. This week we're talking about technical analysis, and the focus is obviously just on the introduction to technical analysis. So the focus is very much for the novice investor or novice, the novice as such, especially the novice trader. Like we do with every webinar, this webinar is being recorded. Those of you on the webinar, I'll be sending you the actual PDF as well as the recording. Please review the material. Any questions you have, please send it through to me. But also, as we go through this webinar, any questions you have, please type it in the little box. I can see it. And if I can ask you a favor, please keep the questions short and to the point. Obviously, the box is very small. It takes me a while to read through it. So that is just a quick introduction to the actual webinar. Let's get started. Hope you guys can hear me. There's the agenda. We're going to, as I say, give a quick introduction. What is technical analysis? But obviously, you can't have one or the other. So we're going to talk about fundamental analysis too. Give you a bit of insight into fundamental analysis. But obviously, the main focus today is on technical analysis. So we're going to talk about the basic philosophy and some of the assumptions around technical analysis, the three ideas or principles for the technical approach, as well as obviously the advantages of technical analysis over fundamental analysis. But obviously, technical analysis also has some disadvantages. So as I say, it's mainly aimed at the novice, a real basic introduction, and obviously future webinars we're going to into more depth regarding the tools or different approaches to technical analysis, but also appreciate any feedback from you guys, what you actually want me to focus on. Obviously, in 2 weeks' time, we'll be talking about moving averages and Bollinger Bands. So you give me what you want me to train you on as such. Okay. So this presentation is based on the online tutorial number 8. You'll find it if you go before logging onto the website. You click on the resource button, and then on the next page you find a section on the left-hand side called tutorials, and then on the next page you find tutorial 8. So this presentation is based on tutorial number 8, which is the introduction to technical analysis. Okay. So, as I say, I hope you guys can hear me clearly. Let me just see if I can get any feedback from you guys. Any questions? As I say, please keep the questions nice and short. Yes, great. Thanks, Pasu, for the yes, thank you. Thanks, Linda. Okay, great. You guys can hear me clearly. Appreciate the feedback. Okay. So, the study of the share market is divided into two schools of thought or two different approaches to the market. On the one side, we've got what you call fundamental analysis, and in this presentation, you'll see I've abbreviated to FA. And then on the other side, obviously, technical analysis, and that's abbreviated as TA. So this webinar, obviously, we're going to be discussing the background history regarding the foundations or the principles of technical analysis. So to understand technical analysis, you must also first understand fundamental analysis. Obviously, I won't harp on fundamental analysis too much today, but it's important to understand the two different approaches. So my goal today is to help you familiarize yourself with the technical approach. I always believe that it's a valuable alternative or supplement to fundamental analysis. I've coined the phrase rational analysis. It's combined both approaches together, fundamental analysis and technical analysis. The more homework you do on a particular market or a particular share, hopefully you'll be more informed and hopefully make more informed decisions. So as I say, it's a valuable alternative that can supplement your fundamental analysis. Okay. There are three things you need to know, or three questions you need to answer to become successful in the stock market. So we need to know, what must I buy, where must I buy, and where must I sell? The question, what must I buy, is asked by fundamental analysis. Fundamental analysis, obviously, you can break it into two big pieces. The macro approach to the market is where you're talking about the effects of the economy on a particular company or industry. and obviously more what we call micro fundamentals, more the financial statements, looking at the balance sheet, the income statement, and the cash flow analysis. And from there, we look at various financial ratios to help us determine what is the actual intrinsic value of the share. And from there, compared to the current share price, you'll be able to make a decision. But the focus today is on the technical analysis. The other two questions, when to buy and when to sell. So timing is your critical success factor when it comes to technical analysis. And there's only two factors we look at. Number one, price, and number two, volume. Price is determined by supply and demand, and volume is people's commitment to price. Okay. That was just a quick overview. Remember the share market analysis, the two different approaches, fundamentals analysis and technical analysis, and that's what we're going to focus on now. Okay. So it's not one against the other. It's just two different approaches, and as I say, I like to use the two together. But let's talk about fundamental analysis. Fundamental analysis is the examination of underlying economic forces that affect, number one, the economy, and obviously chunking down a bit further, various sectors in the economy, and ultimately within those sectors, the companies. Okay. So we look at all relevant factors that can affect the price of a market or a company, and our goal is to determine what's the intrinsic, what's the real value of that particular market or that particular share. So intrinsic value is what something is actually worth based on the law of supply and demand. So if the intrinsic value is under market price, or the market price is higher than intrinsic value, then we say the market is overpriced, and you theoretically should sell that share or should sell or get out of that market. On the other hand, if the market price is below intrinsic value, we say the market is undervalued, and that's where you should be buying. Okay. So fundamental analysis looks at financial statements. As I mentioned just now, we look at the balance sheet, the income statement, and the cash flow statement. And our goal there is to analyze, for example, the balance sheet to determine the value of the company. And we want to try and buy a share if the price is lower than the net asset value of the company, as I mentioned just now. Some analysts also maybe focus on the expected future earnings of the company. And their goal is to buy a company or buy into a share where the share price is lower compared to the future earnings. And that's where a low PE ratio might come in handy. Okay. Obviously, I'm not going to go into too much detail today on the fundamentals. That's for future webinars. Okay. Let's see if there's any questions coming through so far. As I say, just keep it nice and short. I appreciate it, guys. Thank you. Okay. Good. You guys are with me so far. Good. As I say, these are real basics, and we'll move into more detail just now. Just go a bit further. Fundamental analysis helps us identify companies that obviously that represents good value. We want to look for companies that are undervalued. That's on the one side. Also, looking for companies that offer a good long-term growth opportunity. You want to go for companies with good growth prospects. So we're looking at a thorough understanding of a business. If you look at Warren Buffett's approach to a company, he does a full-on due diligence. He has to understand the company so well that he actually puts himself on the board of the company. Okay. So you must understand that shares move in a group. So all the shares in the gold sector all move up together, and vice versa. If the gold price falls and the rand gets stronger, all the gold shares fall. So by understanding a company's business, you as an investor can better position yourself by categorizing the shares within the relevant industry group. Within those industry groups, you can also compare one company to another company, or that company against other, or that industry group against another industry group. The gold sector relative to the platinum sector. Okay. You also compare companies to other companies in the same group. Now the challenge now, it's hard to apply fundamental analysis when it comes to timing. Okay. And this is where technical analysis is very useful. Okay. So that's one side that obviously fundamentals can't answer, is the timing, getting in the right time. Okay. I know some of you that are more or stronger on the fundamentals might disagree with me, some of these things like I might say today, but this is all taken in our textbooks and all the stuff available on the website, on internet websites. Okay. So let's talk about technical analysis. Technical analysis in the past has been compared to voodoo and alchemy and astrology. So there's a lot of this mystique around it and voodoo and things like that. Now the economists going right back to the 1960s, they've always tried to rebuff technical analysis. They say that markets are efficient. We talk about the random walk theory. Okay, that markets actually are random, And I'll write about that in tutorial 12, so you can read more about it. But they're basically saying that prices reflect all information known to the market players. In other words, all information pertaining to the future is available right now in the market. Okay. On the other side, technical analysts are more orthodox than those devout academics. Okay, because the technical approach, we use what we call the strong version of market efficiency. Okay, so we're saying that the market is more efficient. It's so efficient that nothing can be gleaned from fundamental analysis. As I say, I might be standing on some toes today, but just understand that all fundamental insights, all the information, all the analysis, all this kind of information is reflected in the current share price. And we can deduce future prices from the past and present. Okay. So just take, for example, events, be it substantial news events or change in management or oil shock or terrorist attack or accounting scandal, a major contract coming to a company, or even a natural or man-made disaster. All those effects, okay, will cause a share price of market indices to break certain boundaries. The market's been moving in a certain price range. Those kind of events can cause the price to break out of that price band. Now, technical analysis helps us identify those bands, and we trace those breakouts or breakthroughs, and obviously the outcomes in terms of the prices. And we'll talk about it in the next slide. Okay, so we're looking at, when we talk about technical analysis, we look at the peaks, okay, the tops of the market, or at the bottoms, also the trends and patterns affecting those share price movements. And obviously the main objective from that is to help us make a buy and sell decision based on those factors. So unlike fundamental analysis, we're not concerned about the intrinsic value or the reasons why the share price is going up and down. Okay, remember a fundamental analyst will believe, or technical analyst rather, will believe that all the information is already discounted or factored into the number one, into the charts, and obviously that will be reflected in the current share price. So your goal as a technical analyst is to obviously try and buy as close to the starting point of an upward cycle, and try and sell as close to the top of a cycle as possible. But it's not exact science, it's more an art. Now you get 5 different technical analysts together, and you'll have 5 different opinions on the same share. Okay, so it's more an art. It all comes to interpretation than an exact science. Just understand that. What technical analysis does, and this is where I think the strength lies, is technical analysis focus on market sentiment, because that's what moves the markets, how people feel about an industry or sector or a share as such. So it's looking at a share in terms of the popularity in the eyes of the investors. That makes sense to you guys. So we're looking at market sentiment. So past share price movements helps us to determine the probability of future price movements in any direction, be it rising prices up or down or sideways. So we use graphs or charts and other statistical techniques to help us determine price and volume patterns. Okay, obviously that helps us predict the future course of those prices. Okay. As I mentioned just now, technical analysis helps us in our timing decisions. When is the best time to buy or sell a particular share? Okay. So just any questions? Remember, any questions coming through? Just keep them nice and short, and obviously I'll try and answer this as we go along here. Okay. Okay. So technical analysis, bottom line, is a study of market action. I like to say it's a study of price action. So we use charts and help us to forecast future price trends. So we're not talking about price action. Obviously, we're looking at the 2 sources of information available, price and volume. Remember, price is determined by supply and demand. If there's more buyers, there'll be demand. Price will go up. If there's more sellers or oversupply, the price will fall. Volume, as I say, is people's commitment to price. If I really want to like the share, I'll buy as many shares as I can afford. Okay, so that's volume. Volume is the number of shares traded on a daily basis. So another way of looking at it, technical analysis is a price prediction method. We're trying to predict where prices will be going based on historical information and obviously a lot of other tools. Okay, so you must also understand that people buy and sell shares based on the knowledge acquired from whatever means. And obviously those prices are a reflection of those market participants as well as their knowledge. Okay, and this is what technical analysis is based on. It's all discounted into the share price. So price action, I always say price action is my primary indicator. I want to see what's happening with price, and that tells me the psychology behind it. So there are a lot of things we're looking at, obviously the intrinsic facts, but also you're looking at human emotion, okay, mass psychology and the mood behind it. That's why I always find technical analysis together with trading so fascinating because of the psychology behind it. So as I say, prices are determined by supply and demand, but also human emotions. We talk about greed and fear and panic and hysteria and elation and those kind of things. Those are all reflected in the current share price. Okay. So we spoke just now about market sentiment. You can also say it's people's expectations. So market moves on the people's expectations of future events, but also future earnings, wherever the case might be, not necessarily facts. So you as a market technician would disregard those emotional components and just look at the price charts and help them make a decision. Well, that's the goal. You want to try and disregard the emotional components, but obviously emotions do come to it, and that's where the discipline's so important when it comes to trading. But if you stick to the plan and look at the charts and make a decision based on that, cold, hard facts, you'll be successful. So let's talk about some of the basic philosophy and assumptions around technical analysis. There's basically four things. Market value, as I mentioned before, is the interaction of supply and demand. And that supply and demand is obviously governed by numerous factors, both rational and irrational. So those things include, obviously, opinions and moods and the guesses of market participants. Market participants is people in the market and people outside the market and watching it. And what happens now with the market automatically weighs up all these factors on a continuous basis and obviously discount it into the share price. So one of the other things about the technical analysis, excluding minor fluctuations, the share price trends the share prices tend to move in trends, and they persist for quite a long period of time. And your goal is obviously to determine those trends and help us look for future patterns and help us look for changes in those trends. So that gives us an indication of the shifts in the supply and demand relationships or dynamics. So for whatever reasons, for those occurrences, we're not really worried about the reasons. It will sooner or later pop up in the price action. And obviously you want to take advantage of that. One of the other basic philosophies of technical analysis, history tends to repeat itself. Remember, who's involved in the market are people. And we make the same mistakes over and over. So these things do occur in various cycles and obviously in trends. Okay. Let's talk about the three ideas or foundations of the technical analysis approach. First of all, market action discounts everything. And I know I'm harping on the same thing over and over again. But it's very important to understand why technical analysis works. So first of all, market action discounts everything. Secondly, prices move in trends. And thirdly, history repeats itself. Those are the three premises as such that technical analysis is based on. Let's go into more detail. So a technical analyst believes that anything that can possibly affect the share price, that includes fundamentals, the politics, the psychology, or whatever, is already reflected or discounted into the current share price. So your goal is to study the price action. That's always required of you. And there's various ways of looking at it, be it line charts, bar charts. I prefer to use candlesticks because that tells me a lot about the psychology behind the market. Secondly, obviously, the market moves in trends. And that's the whole purpose of charting, is to determine that price action. And your goal is to identify those trends in the early stages of development and obviously to trade in the direction of that trend. Now, there's a cliche in the market, and it sometimes might be overused, but the trend is your friend. It's very, very true. That's your goal as a technical analyst, is to identify the trend and stay with the trend at such time that evidence tells you that the trend is changing. So the third thing is obviously history repeats itself. This is the key to understanding where the future lies, is studying past price action. Because remember, the future is just a repetition of the past. Okay? Because remember, human psychology, as I mentioned just now, we make the same mistakes and we do the same things when certain things happen. They don't really change much. So That's the basic three premises of technical analysis. Saying that, obviously, if you accept those three basics or three ideas of technical analysis, you'll understand why some technicians believe their approach is more superior than fundamental analysis. So if I had a trader choose between one of the two approaches, the most logical approach would be the technical approach. Because by definition, technical analysis includes fundamental analysis, includes the fundamentals. In other words, it's reflecting the fundamentals are reflected in the current market price. So fundamental analysis basically becomes unnecessary. I say that with a caution. I believe that, as I mentioned before, right in the beginning, combine the two together. You'll be more informed. Don't just ignore it. A pure technical analyst would say ignore fundamental analysis. So fundamental analysis does not, the reverse doesn't apply. That's what I mean by this point here. Fundamental analysis does not include the study of price action. We only look at financial analysis, the numbers and things like that. We're not looking at the effects of it. So you can trade financial markets just using technical analysis. It's doubtful that anybody can really trade on fundamental unknown without considering, obviously, price action, okay, or the technical approach to the market. So, saying that, this is what's currently happening. Obviously, technical analysis flourishes and wanes. Obviously, it depends what's happening on the market. But obviously, with a lot of TV programs, we see that lots of times technical analysts and their multicolored charts regularly grace CNBC and Bloomberg's and things like that. Even the magazine, The Economist, has found many successful fund managers regularly resort to technical analysis. George Soros and his quantum hedge fund, as well as Fidelity's Magellan fund, use technical analysis also in their research. So we might be during a bit of a revival, especially when there's some corporate scandals out there, and obviously based on the financials and based on the balance sheets and things like that. A lot of times we find that these things become unreliable due to various scandals, and obviously a lot of people revert back to the technicals. So there will be a lot of argument for technical analysis, a lot of argument against technical analysis, and very obviously for and against fundamentals. The point I'm trying to stress today is combine the two approaches together. Okay. So quickly, advantages of fundamentals of technicals over fundamentals. There are a lot of information out there. Fundamental information is quite easy to come by, be it newsletters, newspapers, financial magazines, but very few people have the time to really sift through the mountains of material. Secondly, what's more important is how do you react to the conflicting opinions and contradictory evidence that you might encounter? And how do you interrelate all the various factors that operate simultaneously? So this is a challenge that a lot of people will find, especially the small investor when he's looking at all this information. On the other hand, technical analysis leaves the processing and evaluation of all that fundamental information to the market itself. Because remember, it's reflected in the current share price. And all you have to do is analyze the current share price. Okay. Number two, one of the other advantages of technical analysis over fundamentals, fundamentals often have difficulty surrounding impartiality. And this I come across a lot, or lack thereof, on the part of the person or the institution compiling the research document or the information. Now, we have stockbroker bias as in favor of a large institutional client. A stockbroker that has Sanlam as the main client won't be giving a sour recommendation on the Sanlam share. Obviously, you want to keep Sanlam's business. Alternatively, newspapers that are promoting stocks or companies that advertise in the newspaper. Obviously, you don't want to stand on their toes either. And that can be an effect on your analysis. Or politicians, they're biased in favor of political aspirations. All these kind of things can be difficult for the fundamental analyst to approach. So a technical analyst is able to divorce himself from the news of the day, and obviously also the subjective opinions, because we're not interested in the reasons of the share price movement. Okay, we want to take advantage of the price action. That's what we're looking at. The third point with technicals over advantages over fundamentals is, we mentioned before that fundamentals have a problem regarding timing, because obviously the stock market always makes a major turn well ahead of the economy. And that's what we spoke about last week in last week's webinar, the investment cycle. Okay, fundamental analysis relies on current information for its analysis, but the market often turns before a fundamental analyst can gather more information and interpret obviously events and its implications. Technical analysts on the other side uses historically based information to help us predict future price changes, especially in the share price. And the last point, the technical advantage over the fundamentals. Fundamentals have the difficulty of coping with obviously the effects of mass psychology. You might do all your homework on the company and determine that the future earnings are going to be great, but the challenge is, what will the market be prepared to pay for those earnings? And obviously that sentiment is very important in determining the price. Okay, so technical analysis incorporates that human psychology in projecting the future price, okay, and obviously discounts future events into today's action. So those are the advantages of technical analysis over fundamentals. But obviously there are disadvantages. There are four. You've got the theoretical and data intensive information. Okay, so we talk about chart patterns and things like that. People try and manipulate the data, manipulate a pattern to try and fit a certain situation. And that can be a problem. The rules regarding these, for example, trend lines can also be subjective and difficult to interpret sometimes. Not so much here in South Africa, but in the States, there's also software programs that uses back testing. So statistical back testing can also be cumbersome. So that's the one thing. I find not so much here in South Africa yet, because we're still way behind everybody else. The widespread acceptance of chart software can be a bit of a problem regarding overuse. Imagine more in the States where it's 50-50 institution regarding compared to the small private investor. So obviously as technical analysis becomes more popular, that can be a problem. Because bottom line, more and more investors looking at the same chart will come to the same conclusions, especially if they're using the same technical indicators and things like that. And the challenge of that is when too many people are using the same system, there's a great likelihood that they can be proved wrong. Okay, because obviously that's where things can go wrong. And then this is also a big challenge of technical analysis, what they call the function of extrapolation. We spoke just now, the trend's your friend, and stay with the trend. But the assumption is what happened in the immediate past will continue into the future, especially with day trading. That's the danger. The trend remains in existence until proved otherwise. That's what you have to look at. You have to be watching the whole time and look for telltale signs that it will be changing. So the danger is that you don't accept that the trend will last forever. Okay. The longer a trend is in existence, the closer then it's closest to its turning point. It doesn't just last forever. So when the prices have been rising for a prolonged period of time, okay, a lot of people will say it will carry on forever. It doesn't happen like that. There is a turning point. And that's the reason why we have stock market crashes, because people, they often miss the point. Okay, not so much stock market crash is a hard word to use. So let's talk about ultimate turning points in the market. We're going from a bull market to a bear market, but more importantly, the daily corrections and rallies. Okay, those are the things we miss. We're on the wrong side of the market, and that's where we lose money. And obviously, the last point I want to make, one of the disadvantages is you're losing sight of the original objective of the stock market. The original objective was to invest in businesses. Now, by just buying into a share, you're actually gaining part ownership of that business. Now, with technical analysis and just using technical analysis alone, some people don't even know what their business they're in. Now, what does your company do? But also, how well is this company doing from a fundamental point of view? So those are the four major disadvantages of technical analysis. Just want you to be aware of it, but obviously incorporate it into your psychology. Okay. So a quick summary, if I put it all together quickly. Technical analysis has been around for many, many years. Okay. But this discipline has not received the same level of academic scrutiny or acceptance I believe that slowly is becoming more acceptable compared to with fundamental analysis, and that's why I stress combine the two approaches together. Okay, one of the main approaches, one of the main obstacles, obviously, is its subjective nature. Who says you must draw the trend line from this point here? It is subjective. Okay, and that's why we're talking about the geographic shapes in the chart patterns. It's in the eye of the beholder. So that's one of the disadvantages or obstacles from an academic point of view. But saying that, several studies have found that fundamental analysis is more effective in predicting trends for the longer term. When I say longer term, more than a year. Technical analysis are more appropriate for shorter term time horizons, up to 3 months. That's why obviously technical analysis is more appropriate for short-term trading. But saying that, combine the two approaches together, they say it's best suited for periods of 3 months and longer. Others say use it all the time. Okay. They found that obviously technical analysis of longer-term trends will help you to determine the long-term waves. But also fundamental factors do trigger short-term developments, and that's obviously what technical analysts takes advantage of. Okay. So guys, I hope you've enjoyed it. Let me just quickly see if there's more questions coming through. Okay, here's a question from Mazwazi. Is there some kind of technical analysis software that a person can use? Okay. Yeah, I'll be talking to the next slide anyway. There are a lot of packages out there. PSG Align has their own little software called WEN Professional Plus. It's an entry-level program. It's been around for about 20 years. The software is for free. We give it away. All you do is subscribe to the information to keep up to date, and that's DataShare, and that's 169 Rand a month. There are a lot of other programs out there. I use Metastock a lot. I've been using it for many, many years. And there are programs out there that will cost you from a few thousand Rand, like 6,000, 5,000 Rand, to programs that cost you 20,000 Rand. So it's up to you. But there's also online software that you can do. It doesn't cost you anything. So to answer your question, Mazwazi, I hope that answers you. Here's a question from Johan. What sources do you use to determine market movement? I'm not 100% sure of your question. What sources do you use to determine market movement? There's news, your television, your newspaper, magazines, forums. There's a lot of information that will help you determine market action. You know, we look at what's happening on Bloomberg to see what's happening on Asian markets. If the Asian markets are up, we've got a good chance of us opening up a firm and things like that. How did the American markets close? So, Jan, I hope that's what you mean by that. There are a lot of information out there. Obviously, the Internet's the best source of information because it's the most reliable and up-to-date. There's a question here from Linda. Something about app on iPhone. Sorry, Linda, I haven't got iPhone. I wouldn't know what app to use for daily stocks. I like to use ShareNet. You can also use Bloomberg's. Bloomberg's is the most popular one where you can add your own little watch list and things like that. Here's a question from Clint. Thank you, Clint. For beginner to technical analyst, which is the first most helpful technique you'd start with. Just look at a line chart, simple line chart, and we'll discuss this in future technical analysis. Line chart will show you the cycles in the market, and the cycles will show you higher highs, higher lows. You'll see a rise in prices. Okay, that's I think is the easiest, and from there we can start adding on moving averages and trend lines and things like that. Obviously, we have lower highs and lower lows. You can see a falling market. You also see areas of sideways market. So I think that's the best thing to do, the best thing to look at. Clint, I hope that answers your question. Okay, thanks, Johan. Okay. That looks like all the questions coming through, guys. Okay, so going forward, thanks for the questions. Appreciate it. If I don't answer your question, I'll follow up on the email. Just going forward, our upcoming webinars next week, Wednesday, we'll be talking more fundamentals again, obviously discussing inflation, public enemy number one, and obviously how the authorities use to combat inflation. We talk about interest rates. We also talk about GDP. So that's next week, Wednesday. There's still place available. Please book. And in the week afterwards, our last Wednesday of the month, we're coming back to technical analysis, and we're talking about moving averages. Very simple technique, very effective. I use it all the time. And also Bollinger Bands. John Bollinger created this thing called Bollinger Bands. Also very powerful, and you can incorporate that into your analysis. So that's the last two webinars for the rest of this month. I'll be putting up the next few for March. And those of you that are in Durban, if you know anybody in Durban, I am coming down there next week Tuesday. We have our first Traders Forum in Durban. I'll be discussing a technical market overview, as well as discussing trading derivatives. So we could discuss what are single stock futures, what are CFDs, what are index futures, what are currency futures, and how to use them. Okay. So if you know anybody in Durban, please send them along. Just book our place on the website. What's also very important is, please, there's time afterwards to have drinks and snacks. Meet us, meet other investors and agents, and start building that little network of people that you can revert back to for also other sources of help and things like that. So guys, quickly in conclusion, the presentation as well as the recording will be sent to you. Please go review that online presentation, the online tutorial for more information. Any questions you guys have, please put up on our Facebook and our Twitter pages so we can stimulate conversation there too. As I mentioned just now, you can subscribe to our WEN software. The software is for free. You can just subscribe to the download, which is R169 per month. It's in-a-day data. You got 25-year historical data. You got all the classical, traditional technical indicators in it. That's the tool you'd be using. As I say, watch out for our upcoming Traders Forum as well as our upcoming webinars. So lastly from my side, good luck, happy trading, enjoy the rest of your days. Thank you very much for your support. There's my email address, there's my phone number. Any questions you have, I appreciate it. I also really appreciate any feedback of any topics you guys want me to discuss in upcoming webinars. Remember, it's every Wednesday, half an hour. I try and keep it to half an hour. But guys, thanks a lot for your support. Thanks for participating on this particular webinar, and enjoy the rest of your day. Keep well.